In 2022, the National Crime Records Bureau linked over 5,500 suicides directly to debt. That is 15 lives lost every single day to financial despair. Behind those numbers is often a familiar figure, the local village moneylender. Operating entirely outside the formal banking system, they can lock borrowers into annual interest rates hitting 120%. Today, that localized exploitation has a modern counterpart. Digital loan apps now offer sectionless cash. You don't need a guarantor or collateral. You just need to hand over total access to your smartphone's data. That initial data grab completely replaces physical collateral. By scraping your contacts, your text messages, and your photo gallery, these apps secure the leverage they need to ensure you pay. Whether it's a physical signature on a ledger or a digital click on a terms and conditions screen, the mechanism is the same. The lender captures the borrower long before the actual cost of the money is understood. This shadow economy relies on a systemic vacuum. Right now, roughly 20% of India's rural population has no access to formal banking services. This chart shows how a predatory equated monthly installment, or EMI, actually breaks down. Instead of paying off the money you borrowed, these interest rates swallow the entire monthly payment, leaving your original principal balance completely untouched. A borrower can maintain this balancing act until an external shock hits. A medical emergency or crop failure instantly severs their fragile cash flow. Missing that first payment triggers an immediate mathematical consequence. Compounding penalty interest kicks in, inflating the debt far beyond the borrower's capacity to catch up. When you combine a vulnerable borrower with an unforeseen crisis, a simple miscalculation is weaponized. It turns a temporary cash shortage into an escapable financial trap. The formal banking sector operates on a strictly defined legal timeline. When you miss a payment, a specific 90-day window opens up. This timeline illustrates that 90-day grace period. It is only after 3 full months of consecutive non-payment that a bank can legally reclassify your loan as a non-performing asset, or NPA. Once that happens, the legal reality of defaulting in India is clear. It is a civil matter. It is not a crime. If you are a genuine borrower who ran out of funds, you cannot be imprisoned for missing your EMIs. There are no criminal charges for an empty bank account. But the shadow economy thrives by ignoring this fact. Their recovery model relies on convincing panicked borrowers that a missed payment is a criminal offense that will result in immediate arrest and complete social ruin. To enforce this fear, traditional moneylenders rely on a tactic known as the reverse deed. They force borrowers to pre-sign land transfer documents the moment the money changes hands. If the borrower defaults, the lender uses those documents to immediately seize their farmland, bypassing the courts and legal due process. Digital loan apps execute their own version of this, but they use the smartphone permissions you granted them to scrape your entire contact list. They initiate a campaign of psychological pressure, systematically calling your relatives, neighbors, and employers to brand you a thief. For microloans, the pressure moves into direct blackmail. These apps take stolen images from your photo gallery and morph them into explicit, defamatory pictures to force a payment. These recovery engines are designed to isolate borrowers from their community. They take a mathematical deficit and escalate it into unbearable psychological pressure. There is a regulatory countermeasure to this abuse. The Reserve Bank of India has binding guidelines for loan recovery for all registered banks and NBFCs. First, recovery agents are legally forbidden from contacting you before 8 a.m. or after 7 p.m. Second, agents are explicitly prohibited from contacting your family members, neighbors, or employers under any circumstances. Most importantly, the formal banks and NBFCs cannot hide behind third-party recovery agencies. The institutions themselves are held directly legally responsible for any abusive conduct or threats. These regulations only provide protection if the borrower knows they exist. Without awareness, the rules never reach the person being harassed. If an agent crosses the legal line, you can file a formal grievance through the RBI's online complaint management system. This flowchart maps your path. By filing a complaint, you bypass the aggressive agent entirely and go straight to the RBI Banking Ombudsman, who can award you up to 20 lakh rupees in compensation for harassment. If your debt is truly insurmountable, there is a stronger legal option, the Insolvency and Bankruptcy Code of 2016. The IBC Fresh Start process legally mandates an immediate halt to all recovery harassment. It provides a structured path to forgive the debt for low-income individuals. Utilizing these mechanisms removes the fear from the equation. It turns a targeted victim into a legally protected citizen, empowering them to penalize abusers. While these laws can stop the harassment, they don't solve the underlying lack of infrastructure and poverty that forced the borrower to take the loan in the first place. Grassroots organizations like WOTAR, Monolavok, and UVS step in before the trap is ever set. They help rural communities transition to sustainable, systematically irrigated agriculture. By organizing self-help groups and teaching climate-resilient farming techniques, these organizations give farmers tools to build their own capital and end the reliance on usury. A missed loan payment is a mathematical deficit, not a moral failing or a criminal act. Financial literacy and knowledge of legal rights allow the borrower to navigate out of the trap.